Hi everyone, I'm Johnny Kolasinski. I'm the Business Development Manager here at XY, the Findables Company. This is our first investor update, and so I want to introduce our CEO and founder, Arie Trouw.
Hello. Very nice to have you guys join us on this conversation that we're having about our update for our company. And we have quite a few questions that we're going to be answering today. So stay tuned and you can find out some more about the opportunity if you are not an investor yet, or an update if you are a current investor. Thanks, Johnny.
Arie, Kelvin in Fremont wants to know what visions you have in regards to the products and the company as a whole.
That's a really good question. I get asked the future question a lot, I guess, about the company. And the vision of the company really is to be an all-around findables company, hence the name, XY Findables. We don't want to make just a Bluetooth beacon or a Bluetooth device. We want to make a findable solution to help conquer this age-old problem of losing things or having things stolen or not knowing where things are and wasting a lot of time on that. It's something which I strongly believe that if it's in sci-fi, it's a real problem and it could be a world-changing problem to solve. You've seen this with things like cell phones, for example. You first saw it in Star Trek with a communicator. And then they made cell phones, and now the world's different because of cell phones. You have the same thing with data as far as Google and searching it and being able to find whatever you want to answer-wise that way as well. So the Internet of Things is a very large scope concept. It could be a multi-trillion-dollar industry eventually, if it isn't already, if you count phones, for example. And finding things within the Internet of Things is a really large portion of it, being able to access that. And we got into this whole findability concept because we founded our company on the concept that everything in the world, whether it's a person, whether it's a device, whether it's an item, has an identity. And that identity really is an XYZ coordinate and a T coordinate, and the T standing for time. So basically, as it goes through the world, you can't escape from this one spot that you're at, but then you can move around and you can interact with other devices or other items or other people that have a X, Y, Z and a T coordinate. And the T basically is the measure of what's going on in those interactions. So findability to me is something which is really, really big and really important, and something which is going to change the world over the next 10 or 15 years. And I want to be part of that. I want the company to be part of that. So that's really the overarching vision for this company. And it isn't limited to Bluetooth. Bluetooth just happens to be very convenient since phones happen to have Bluetooth on it. There are low energy, inexpensive chips you can make Bluetooth devices out of, and it's a very good solution, but it has limitations as well. We're coming out with our XY GPS, or actually we came out with our XY GPS device to overcome some of those limitations for Bluetooth for range and for performance, for example. But there's also lower end sticker-based, for example, and more inexpensive solutions for the other aspects of findability. So findability really, it bridges a whole bunch of different technologies, different concepts, different use cases. And we want to address all those and obsolete findability. And that's why we are coming out with products that are not just a bigger, better version of the same thing. We do want to make bigger, better versions of our products, but not just one product and one path. We want to solve the whole solution.
So Mark in Massachusetts, who's a current investor, asked about a complete summary of the competitive landscape, specifically the companies we see as the toughest competition, and what we've learned from what they've done right. Okay,
so there is probably not a specific competitor that I would say is our direct competitor of ours on all aspects. We're a little bit different than most of our competitors in the fact that we have different technologies, different components, and we look at the world a little bit differently, but there's definitely competitors on the specific products. So say, for example, the Bluetooth space, there's Tile, Tracker, Tripolo, and probably half a dozen other Bluetooth devices out there that have similar functionality. And so we compete with them. On the GPS side, there's some competitors there also, like Trackimo and TrackDot, for example, and a couple other ones for pets, which we compete with there. And then we really have a compelling product that competes well in each of those verticals, but then we have a solution that also bridges all those different things. Now, probably our strongest competitor at this point, especially in the Bluetooth space, is Tile, I would say. And Tile's done a really good job as far as they came out early in the cycle of this development. They've sold a lot of product. They've gotten a lot of users out there. To make it a decent product, it's our XY4 beats it in pretty much every single aspect as far as the specs go: range, volume, and battery life, for example. And battery life, I think, is actually an interesting one because it kind of showcases one of the differences between us and Tile to a large degree. We look at our device as something which a person buys. It's a device you own. You don't rent it. You don't have it only for a certain period of time. So you buy it, and then you can replace the battery, and you can use it for 5 years if you want to. Our battery life also for X-By-4 is 1 to 5 years, depending on how high the performance you put onto it. And then we also let you continue using it. Where Tile, they've made more of a rental or like a leasing sort of subscription model and back into that. And that basically is because they made it so it's disposable. You have to throw the device away after 1 year, and then you get a new device by retiling. And in my opinion, that actually is pretty terrible for the customer. It's really good for Tile because they get recurring revenue from this, and they've really gotten a subscription model without calling it a subscription model to a large degree. And they basically, for 5 years of use of a Tile Pro, you would have to pay $135. It's $35 for the first one and $25 to retile, according to their website, for each of the next 4 years. So that's pretty expensive to have that. Where for us, it's $35 for the X-By-4 Plus, and the battery could last up to 5 years, or even if it doesn't, even replace it 4 times because you put it on maximum performance, it's still only going to be $39 for those 5 years. So from a business model standpoint, we're quite a bit different than Tile, but at the same time, they've definitely done a good job in getting out there and developing partnerships, and they're probably our strongest competition.
Yeah, they've got the planned obsolescence thing pretty down pat.
Yeah, and I think it's that's good for them, but it's not good for you as the customer or the person who's paying that cost.
Mm-hmm. Kind of follow up to that question is what's the current market penetration and potential growth for XY?
So the market has developed a lot since it started. We started making these things in 2014, and probably in the first while, I'd imagine between us, Tile, Tracker, Trapolo, probably around 1% of the world, maybe at most, have some sort of findability solution that they use, and maybe as high as 3% in the US of people have a findability solution of some sort that they use with their smartphone or smart device. It might even be lower, but I'm just basing that on number of units that seems to have shipped, and if you assume like 1 or 2 units per person. And also, the attrition, I think for some of our competitors like Tracker, is pretty high, so I don't know what percent of their sales are still being used. But let's assume that it's that high. Even at 1% and 3%, I think there's a lot of growth for this space because it'll probably max out somewhere in the 25% in the US range in the short term, maybe even as high as 50% eventually. So I think there's a lot of growth for the space at large. But I think there's also a lot of growth for XY because besides growing with the space and selling into the space and having new customers, we also have the opportunity to basically transition people away from companies like Tile or Tracker because they're not happy with their product or their way of their product offering being disposable, for example, or temporary with the cost. So I think our competitive advantages will allow us to grow on both those aspects, the market size and the competitive landscape.
We also have the advantage that we have the one unifying platform for different types of findability, where we've got the GPS and we have other potential aspects that you wouldn't have to build a separate app around or download as a user.
Yeah, so I think that's the important part where besides the fact that we have, like comparatively to the other different products, a better product individually, we also have a better overall solution, in my opinion, because of the fact that we don't just support one technology.
Mm-hmm. So are investors going to have the chance to beta test some of our future projects?
Definitely. So one of the biggest goals we have with our Reg A Plus investor concept is that we want to have input from our investors, and we want to have them be able to get early access to our devices when possible. Devices are often hard to get large quantities of beta or early devices for, so they'll at least get them earlier than the rest of the people, but they'll probably be final devices. And then also have access to our apps, for example, for beta versions on there. So they can do that right now if they contact our support team or our investment team, and they can ask for access to the iOS and the Android beta installs of our apps. They can see those. Sometimes that could be a positive or negative because you get to see the new features, but you get to see some new bugs in case they weren't caught yet. But it's very important for us to be able to have our investors help us with real-world data and information about our products and help us improve it. Because one of the things that's difficult often is if there's something that is problematic with our product or with our app or our device, and we can't get good feedback from the real world because environments are different, devices are different, and those sorts of things. Getting that information back to us to be able to improve the product, which is the whole goal of a lot of this, is really, really important and very, very helpful. So we also recommend that our investors, what they do is if they have a problem, first of all, they should use the products. We should, that's why we provide low cost ways for them to get product for themselves and for their friends and family. But they should use the products, and if they have good experiences, of course, go on Amazon, the App Store, Play Store, give us good reviews, because good reviews are gold for us, because that helps us advertise and show how good our product is. But if there are problems, instead of putting a bad review up, of course, come contact us, talk to us about it, give us information on how to fix it, help us fix it, and once we fix it, then go give us a good review if the problem has been resolved. So that whole process is something which is very valuable to us as far as the company goes and for the future of our products and being able to improve the quality of the products. Also, a big benefit of having our shareholders is to be able to, with word of mouth, spread the word that we have a really amazing product. We have features that are eclipsing our competition, and buy them as Christmas gifts for your friends and family, or just tell them about the investment opportunity or the company and the products.
And how does the new line of products address some of the issues that we might have had with some previous models?
It's a very good question. So let's speak about the Bluetooth device we have, X-Byte 4 that's coming out. There's really 4 important features in a Bluetooth device like that and in our X-Byte 4. The 4 are the volume of the speaker, or the buzzer in this case, to be able to find your item and have humans and people be able to hear it very well. The battery life and how long that lasts. And then, of course, the range of the device, so how far away from your phone you can be when it works. And then the 4th one is the consistency of manufacturing. So let's start with the last one first. The consistency of manufacturing issue we've really dealt with by changing CMs, which is a contract manufacturer. So we have a partner now called SMK. It's a very large multinational Japanese firm that is manufacturing our X-Byte 4, and also they did our X-Byte GPS product for us. And their consistency of manufacturing is substantially higher than our previous manufacturing partners. So we basically can have a very consistent output of quality and improve the quality that's there. So we've addressed that issue.
Plus there's the fact that they're in Tijuana, Mexico rather than China, which is just a few miles away from us, and we can actually go check in on them.
That's correct. So they're much closer. They're also manufactured in North America, which is really nice. I do prefer that, and as you said, we can go visit it and see how things are going and fix things if there are issues. As far as the other 3 features, volume, we found out that, especially in X-Byte 2, that the high frequency sounds are not always hearable by older people over 45 or 50, and also just the actual volume of the sound is very, very important to be able to find your stuff. So in X-Byte 4, we have once again doubled our volume from X-Byte 3. X-Byte 3 was really double the volume of X-Byte 2, I believe, approximately. And that increase in volume also makes X-Byte 4 substantially louder than our competition, whether it's Tile, Tracker, Tripolo, and all those. I believe Tile is at about 98 decibels according to their website for their Pro, and 90 or 89 for their standard Tile. Tracker, I believe, is at about 90 decibels, and Tripolo, I think, advertises about 100 decibels. We've tested our X-Byte 4 up to about 112 decibels. And for people who don't know about decibels, every 6 decibels you go up doubles the volume of a sound. So going from 100 to 106 is double, and going from 106 to 112 is double again. So if going from 100 to 112 is actually 4 times as loud. So it's substantially louder, and it really makes it easier to be able to find it. Combined with the fact that we have customizable songs and a bunch of songs to choose from, it allows a person to pick the ones they can hear the best given their hearing range on their person. As far as the range of the device itself goes, we've increased that by using a Skyworks amp for our RF radio, and that allows us to work up to about 100 meters away from a phone. So the phone can pick up the broadcast from our device that far away. It's about 300 feet. That compares to Tile, which is approximately
150 to 200.
On Tile Pro, and I think it's about 100 feet on regular Tile. And then Tracker is about 100 feet also, I believe, at 33 meters, and Tripolo, I'm pretty sure, is about the same range as well. So this is by far as far as I know, the longest range Bluetooth devices out there right now. The loudest Bluetooth device out there as well for a Finder. And then the battery life is something which we wanted to address. Our XY3 had some battery life issues as far as it, depending on how often you used it and how much you buzzed it, it would be between about 6 and 9 months, I would say, is realistic for most people's usage. In theory, about 12 months would be the most. We improved our Bluetooth chip efficiency by switching to a new Bluetooth manufacturer. We're now using Dialog as our chip of choice for XY4, and we're exploring some other chips as well for energy efficiency, and not using CSR anymore, which was our previous version of our chip. That one was a couple years old and wasn't as energy efficient. And also we're using a different battery. It's actually a slightly larger battery called a CR3032, which has more than double the amount of power in it compared to the CR2032 that we used for the previous version. So by doubling the efficiency of the battery, increasing the efficiency of the broadcaster with our RF amp as well, and having a new Bluetooth chip, we have increased our effective battery life to about 5 years on average performance, kind of the same as XY3 performance, or like scaled back XY3 performance, and about 3 years for true XY3 performance, and then about 1 year for super high performance. So a person can kind of pick how long they want the battery to last, but more importantly, we can replace the battery as well. So for example, compared to Tile, which is a disposable product that you have to go and buy a new one every 12 months, in this case, besides the fact that the battery can last up to 5 years, even when it dies, you can go ahead and replace the battery in there as well. And then, so we cover all three of them, the piezo sound and the range and the battery life there.
Yeah. So let's talk a little bit about the investment process now. You talked a little bit before about why you went with Regulation A+ over other methods of funding.
So Regulation A+, I personally think is a really, really big opportunity and exciting thing for investors in the United States, especially and worldwide, because previously people could not invest this early in a growth company like our company unless you were an accredited investor. So for example, you could see how much money the earlier investors made in Facebook or in some of these other large stories that are out there. And the reason they could make more money was because they were allowed to buy it at an earlier stage. The way that, generally speaking, investments work is the earlier you invest in something, there's higher risk but higher reward. And so, for example, the seed investors, the people who invest right when the company is just a smidge of an idea, will make the highest returns on it, and then so on and so forth. But until recently, people could not invest actually until after the company went public, unless they were an accredited investor. So I think that's a great opportunity. But more importantly for us, it's because we can have our customers own our company as well. And that gives us the ability for our customers to give us feedback and to help us improve our quality of our product pretty substantially, and do various things like that. And also word of mouth and spread knowledge or information about our products with their friends and family. So there's a lot of really good reasons, I think, for us to do Reg A+ instead of the traditional VC route in that thing. And also it takes us one step closer to an IPO. I can't say that we're going to do an IPO anytime soon, or when, or how much it would be for. People constantly ask me that question. But a lot of the same things we had to do for our Reg A+ are things we would have to do for an IPO eventually anyway. So it's about a half step sort of a thing to an IPO. We have to do the same sort of audits for our books. We have to do the same sort of SEC regulations and all those sorts of things. So pretty much we're partially there, which is pretty exciting.
And how many investors do we have now?
We have about 1,200. Well, I guess about 2 weeks ago we sent out an update for that. So it's probably a little bit higher than this, but we have about 1,200 investors, about 1,400 investments, and about $1.3 million in funds raised so far at that point. So pretty exciting. Probably a little bit higher than that now because time's going on, and it's done quite well. We did about 1.1 million, maybe 1.15 million of that directly on our site after we left Start Engine and the platform, and the other 170,000, I believe, or so was on Start Engine.
You talked a little bit about the potential for an IPO. Can you talk a little bit about what other exit events and ROI opportunities for investors would look like?
Definitely. So one of the most common questions we get is what the ROI opportunities are, how much a person could make or will make, when an IPO would be, or when an acquisition would be, and that sort of thing. We obviously can't answer any of those questions as far as specific dates or times because we just don't know. We don't know what or if or when any of those things may happen. But some of the possible outcomes are obviously the IPO or that sort of a thing, which would be a great direction for us to go. There's also the possibility of an acquisition, of course, where if a company were to come and buy us, that would be a little bit different. And in those two cases, the way it really works is in an IPO case, the shares that you own will be then made into more public shares and they get transferred to a traditional brokerage account and you can buy or sell them just like you could any other stock that you have. In the case of an acquisition, what happens is we take the amount of money the company's being bought for, divide that by the number of shares that are outstanding, and then each person who has shares basically gets a check for the amount of money which they would have gotten for buying or for selling those shares to the company which is buying us. So those are two possible outcomes and how they work. And then people also ask often about dividends, and they're like, oh, how much dividends are you going to make, or how much profitability does the company have? One of the things that I want to make clear to people is that our goal right now is not to be profitable or to pay dividends. And there's a couple of reasons for that. One is because we want to grow the company's value and the equity value. So when in the future, if we do get acquired or if we do have an IPO, the value of the shares would be higher. And we don't want to have dividends or profits at this point. And the reason for that is because from a tax standpoint, we're a C Corp at this current juncture. We used to be a LLC, which was a pass-through entity, but as a C Corp, what happens is if we have a profit, we have to go ahead and pay income tax from the company first, then pay out the dividends, and then each person who receives the dividends has to go and pay dividend tax on that. So which is not very good from a tax treatment standpoint. It's in many cases higher than 50% of the money will go to taxes. Where if we grow the value of the equity and we sell the equity, especially if it's a long-term capital gain for the person, because they've held it for more than a year, the tax treatment is a lot better. It's between 20 and 25% depending on where you live and those sorts of things. So we definitely aren't focused on profitability and paying dividends, and we are focused on growing the company and with a target towards some sort of liquidity event that, again, we can't promise or say when or if any of that may happen.
Okay. And building on that, this is another question from an investor. What framework is in place to prevent acquisitions prevent being acquired by a competitor?
So one of the things that is commonly done in companies like this, Facebook has done the same thing with Mark Zuckerberg shares, for example, is the existing shares before a public offering, which Reg A+ is a public offering, the existing shares get a multiple of voting rights. So it doesn't economically change the shares at all, because if I were to sell my shares, for example, or Johnny his, or any of the employees here sell their shares to the previous investors, those shares will revert to having only one vote each. But until that point, we have, I believe it's 10 votes each for those shares, which makes it so that even if we sell, say, 70% of the company, we still maintain control of it. So a person can't go out and buy 51% of the publicly available shares and take over the company in a hostile takeover sort of a thing. So it basically protects us and the company from the standpoint that we don't have to worry about that. We don't have to say, oh, well, if we sell a few more shares, now we have a risk of potentially losing control of the company. It maintains that control. And it's very common, but it was important to me to make sure that there was no economic difference between the shares that our investors are buying and the shares that we have. So that's why there aren't any preferred stock or preferred shares. There's no way to transfer those shares to a buyer, for example, and maintain the voting rights, because that would actually elevate the price of the shares. So economically, there's no difference in those shares, but there's that voting right difference, and so that helps protect us from any sort of hostile activity.
And how can an investor, this is from Gary in Athens, Ohio, who's a current investor, how can he or other investors track our success?
So the easiest way to track our success is to, well, I guess the easiest way is probably to tune into these sorts of conversations. Go look at our website and see all the updates that we send out. And we'll try to communicate those in as efficient and as simple way as possible. Of course, we also have to file all of our SEC filings, which are done twice a year. We have a semi-annual and an annual filing that details our accounting and our progress as the company goes. Those are pretty hardy documents. They're about 50 to 100 pages each. and a lot of detail. So they're not really for most people's consumption. I've read through them, and I won't say I understand every single last part of it. They're pretty complicated, and but everyone should read those, especially if they have a background in which they can understand those. They're very important because they're very, very detailed. But between that and our updates, it's important to follow us. The one thing I'll say is we can't give out information specifically to one person. That's a tell one, tell all sort of a model for the SEC regulations, where if we tell one person, for example, oh, this product's coming out on this date, then we have to tell everybody that, because that may affect the person's decision to buy or not buy shares and that sort of a thing. So we have to make sure that communication or information like that is maintained in a proper way.
More general question now. This is from Alexander, who's also a current investor. Do you have any advice for novice investors?
Well, I can't advise them as far as what stock to buy. That's something which is not appropriate for the SEC either. I, of course, like our shares, because I've invested over $5 million so far in our own company. So, XY, that's why we're here. We're talking about the XY investment opportunity. But as far as advice goes, or general advice, I would definitely suggest that people first and foremost follow the rules and guidelines that are out there. So if you're investing in Regulation A shares, make sure you follow the 10% annual income or 10% net worth rules, where basically whichever one of those is higher, that's the maximum you're supposed to invest per year in Regulation A stock. It's put in place to protect people from overindulging in something which is really good. But I think this is a really exciting opportunity. So I would definitely encourage people to check out us or other Regulation A plus companies as well. And then also there's, to me, a big part of investing in this sort of a company. I'm also an angel investor in San Diego here. I've invested in other companies, other startups. And I really, really enjoy investing in them because I kind of become part of the company. I get to see how they grow. It's a lot more exciting and interesting than investing in stocks or bonds on the grander scale, because you don't have any input into that. And it's really becomes kind of a lifestyle. And for me, I've become an entrepreneur because I really enjoy the concept of entrepreneurship. And I get that question often from students or from kids that are out there who are like, hey, I want to become an entrepreneur. This looks like a lot of fun. And I often tell them that it is great. I love it. I come to work 12, 14, 16 hours a day, every day, and I enjoy all those hours. They're very, very hard sometimes, but I enjoy those hours. But it's a lifestyle. It's something which, if you're compelled to do it, I would definitely recommend doing it because you would love it. But if you're not compelled to do it, you'll probably be pretty miserable doing that. And this sort of investment is kind of nice from the standpoint that it kind of gives you a taste of that. You don't have to be, go all in 12, 14, 16 hour commitment into that, but you can still kind of experience part of that Silicon Valley TV show sort of a vibe, where it's an interesting experience and an interesting journey, which people can go on with us as a company and with me. Because that journey to me is why I do this. The money is nice as far as being able to have an exit, being able to achieve that, but the achievement of making something and changing the world and impacting the world around me and accomplishing something, that journey is really, really amazing and really fun. So I would definitely recommend people invest in things that they find exciting, they find interesting, and look for those companies that they have faith in.
And last question here. What's been your largest struggle as a CEO in founding the company, bringing it to life, and what are some of the success points you've seen as well?
That's a good question. XY has been an especially interesting voyage for me so far. My previous startups were mostly in the software field, and I'm very, very experienced in software, so I kind of knew what I was getting into there. XY has been way more complicated than I anticipated from the standpoint there's software, there's firmware, there's hardware, there's servers, there's apps on phones, and all these hundreds of different kinds of phones, and there's the environment, there's the satellites for GPS are going around the planet and they're not always the same place. The cell towers are different from place to place. There's all these different variables, which makes making a product like this really, really complicated, which on the one side makes it really exciting and really fun when things are working and it's like, wow, that's amazing. We just made this thing that's really complicated work. But at the same time, it's really, really challenging and it's really, really hard, which I think is a good thing because it prevents every Tom, Dick, and Harry out there coming in and making the same product. You see that on the App Store sometimes. Someone comes out with Flappy Birds. Next thing you know, there's 50 Flappy Birds out there. You can't jump into this quite as haphazardly as you can the App Store. So it helps us protect that there. But that's been really a challenge to me is is rising to the challenge of being able to make a product that's complicated and pull it off, because it's way more difficult than anything I've done before, and I really, really enjoy that.
Great. Anything else we want to say as we're wrapping this up?
Well, I always really appreciate everybody who tunes into this, and thank you to all of our current and potential future investors. When somebody gives me money as an investment in a company like this or my previous companies, I take other people's money very, very seriously. Probably more seriously than my own money that I invest, which is probably a good thing, because it's important for me to try my best. It's as I said, I work long hours. The people at this company work long hours. It's a lifestyle and a culture, and we really appreciate the fact that people have confidence in us and faith in us to invest in this company. And it's a big responsibility and a burden, but it's also a big honor for us to have people alongside us and join us and be part of this fantastic journey that we're on.
Awesome. Well, thanks everybody for tuning in, and we'll be doing more of these.